Now we have to calculate the interest. Interest is receivable. For him, interest is payable. For hire seller, interest is receivable. If it is more than the actual principal price, then it is interest inclusive method. Or if it is equals to the actual principal price, then it is interest exclusive method. In hire purchaser account, we have to write to interest account. In interest account, we have to write by hire purchaser. Hello my dear students, I am your AJ sir, Faculty Department of Commerce and Management, Vidhyaashram First Grade College, MYSURU. My dear students, today I am going to handle the subject called Financial Accounting 2 for second sem, BCom, and the topic on accounting for hire purchase system. In the previous session also, we were discussing about the problem in the books of hire purchaser, journal and ledger, and in this today's session also, we are going to discuss ledger entries in the books of hire seller. See, on 1st Jan 2009, Sony Travels purchased 2 motor cars costing rupees 3 lakh each. See, Sony Travels is the hire purchaser, is the Sony Travels, and purchased, what is the asset? Asset is car. The worth of car is for one car. Each car means for one car it is 3 lakh. So, for 2 cars, how many cars we are purchasing? For 2 cars, it is 6 lakh. So, total cost price or cash price of the asset is 6 lakh rupees. From Vikas Motors, though hire seller is the Vikas Motors, hire purchaser is the Sony Travels, and the hire seller is the Vikas Motors. Under hire purchase system basis, the terms were, so there are some conditions. Let's look at the condition one by one. 25% of the value is to be paid as down payment. So, out of 6 lakh rupees, so 25% as we have to pay the down payment. So, 6 lakh. So, 6 lakh into 25%. So, we'll get 6 lakh into 25% is 1,50,000 rupees. We have to pay the down payment. Remaining in how many installments? The balance amount is to be paid in 4 equal installments. So we have to pay the remaining amount. So after deducting 6 lakh minus 1,50,000 means 4,50,000. That 4,50,000 should be paid in 4 equal installments. So he has given the amount. So once he given the amounts, so let's check whether if it is more than the actual principal price, then it is interest inclusive method. Or if it is equals to the actual principal price, then it is interest exclusive method. 31st December every year, the Vikas Motors charge interest at 9% per annum. Prepare necessary ledger accounts in the books of hire seller. So that means Vikas Motors, we have to prepare the ledger entries in the books of hire seller or Vikas Motors. So let's go to the working note. Now what is the cash price of the asset? Cash price of the asset is 3 lakh rupees per car. For one car it is 3 lakh. Into how many cars we are purchasing? We are purchasing 2 cars. So it is 2 cars, it equals to 6 lakh rupees is the cash price. Now what is the down payment we have to make? So we have to make the down payment of 25% of 6 lakh. So 6 lakh, it is down payment. 6 lakh into 25 by 100. So it is 1,50,000. So if you deduct 1,50,000 from the 6 lakh, so you will get 4,50,000. So into how many installment we have to pay? So we have to pay the 4 installment together with interest. So divided by 4. Let's check here. We have to make 4 equal installment, and he has given the installment amount also. So let's calculate. 4,50,000 divided by 4 equal installment means, so we had to pay 1,12,500. This is the actual principal amount we have to pay. But here what amount he is telling to pay? So 1,38,900 rupees he is telling to pay as an installment. That means it is more than the principal amount. That means its problem is interest inclusive. So in interest inclusive, installment will be same, principal will be changing while calculating the installment. In the interest exclusive method, principal will be same. Installment will be changing. Interest inclusive, interest exclusive. In the interest inclusive method, installment will be same. Principal will be changing. In the interest exclusive method, principal will be same. Interest will be changing. Please bear in your mind. Now, let's go to the calculation of principal, installment, interest and depreciation. So, first one, cash price. Price of the asset. So, what is the cash price? 6 lakh is the cash price. Minus depreciation. What is our depreciation? 1,50,000 is the depreciation. Minus depreciation 1,50,000. So, we will get 4,50,000 remaining amount. So, let's write this 1,50,000 as the principal because down payment is also part of principal. So, there is no interest for down payment because we are paying the down payment on the same day when we are purchasing the asset. So, let's write installment 1,50,000. So, depreciation, there is no depreciation because we are calculating or we are preparing the ledger entries in the books of hire seller, not in the books of hire purchaser. So, hire seller is not having any asset, so need not to calculate the depreciation. Next one, minus first installment. So, what is our first installment? Let's calculate. So, every year installment should be same. How much? 1,38,900, and we have to calculate the interest first. So, let's calculate the interest. On the 4,50,000 we should calculate the interest because this is the remaining balance we have to pay to the hire seller. So, on this amount we should calculate the interest, or remaining balance we should calculate the interest, not on 6 lakh rupees. Please bear in your mind. So, 4,50,000. So, what is the rate of interest he is asking to? So, he has given 9% interest. So, that means into 9 by 100. So, let's calculate what is the rate of interest. So, it is 4,50,000 into 9% is 4,500 is the 4,500 is the rate of interest. And let's come to the installment. So, installment will be same for every year. It is, he has given 1,38,900. So, in the interest inclusive method, interest will be same for every year. In the interest exclusive method, so principal will be same for every year, interest installment will be changing. In the interest inclusive, installment will be same and principal will be changing. So, what is the 1,38,900? Now, we know the installment and we know the interest, we don't know the principal. So, what is the formula for installment? So, principal plus interest equals to installment. I'll write here. So, principal plus interest equals to installment, isn't it? So, now we know the installment and we know the interest, we don't know the principal. How to calculate? So, then installment minus interest equals to principal. So, A plus B equals to C. If we don't know the, so B or A, so we can calculate B minus C equals to A. That means principal plus interest equals to installment. We don't know the principal. So, installment minus interest equals to principal. So, let's deduct this interest from installment. We will get the principal amount. 1,38,900 minus 40,500. So, we'll get 98,400. 98,400 is the principal amount. Now, deduct this principal from total principal 400. So, let's calculate. So, it is 3,51,600. Now, let's deduct second installment. Let's calculate the interest on this. 3,51,600. So, into 9 by 100. So, it is 3,51,600 into 9% is 31,644. 31,644. So, we know the installment every year it is 1,38,000. 900 should be there. So deduct this interest from installment, you'll get the principal. So 1,38,900 minus 31,644. So you'll get 1,07,256. Now again deduct this principal from total principal. 1,07,256. Deduct this amount from 3,51,600. So you'll get 2,44,344. So again let's go to the third installment minus third installment. So what is the third installment? So again let's write 3,38,900. Let's calculate the interest on 2,44,344 into 9 by 100. So into 9%, you'll get 21,990. 2,44,344 to 20. Let's deduct this principal 1,38,900. So I'll get 1,16,909 rupees. Again deduct this principal from total principal 1,16,999 rupees. So 2,44,344. So we'll get 1,27,434. Please bear in your mind, my dear students, for the last year don't calculate the interest. So for the last year we have to just adjust. So again for last year 1,38,900 rupees will be there. So whatever the difference you will get. So this is the last installment 1,27,434. For the last year we need not to calculate the interest. For the last year what we have to do? So this is the last installment. So this is the last principal amount. So we have to adjust the principal amount. How to adjust? We just deduct this amount from total installment. Whatever the difference you get, that is the interest. See, listen here, once again I am repeating. So total installment, this is the last installment 1,38,900. If you deduct this principal amount 1,27,343 from this amount, you will get the difference, that is the interest for the last year. So for last year, for the interest inclusive method, if you get in the exam for the last year, no need to calculate the interest on the for the last year. If you calculate, you will get quite difference, because we will be having some point numbers after the points. That's why we have to adjust the amount here. So for last year, fourth installment. So no need to calculate, just we will pay all the total amount 1,27,434. So it will become 0. Principal 1,27,434. So whatever the difference you get, that is the interest. So minus 1,38,900 minus 1,27,434. So difference is 11,466. We have to just adjust the amount here. So we should not calculate. So 1,27,434 plus 11,466 equals to 1,38,900. So this is how we should adjust. So now depreciation, no need to calculate depreciation, because we are doing journal or ledger in the books of higher seller. So higher seller is not having the asset, no need to calculate the depreciation. Let's go to the ledger entries. Now what is the ledger entries? First one in the books of higher seller. So we have in the books of higher seller, we have to prepare higher purchaser account and interest account. So what is the journal entry? Same journal entry we are preparing ledger. So journal entry is higher purchaser account. So I am the higher seller, I am selling the asset to higher purchaser. Let's assume I am the higher seller, you are the higher purchaser. So as a higher seller, I am preparing your account. As a higher purchaser, you have to prepare my account. So as a higher seller, so I am sending the asset to you. So who is the receiver of the asset? Debit the receiver. Higher purchaser account to what is going out? Asset account. Journal entry by higher purchaser to asset account. So in this problem, what is our asset? Car is our asset. So when we are going to sell the asset on 1st Jan 2009, we are going to sell the asset. So 1st Jan 2009, to asset account. What is the cash price or cost price of the asset? So our cost price of the asset is 6 lakh rupees. Let's write 6 lakh here. Next one, we have to receive the down payment on the same day of the purchase or sale of the asset. We have to receive the down payment on 1/1/2009. We have to receive the down payment. What is the down payment? 1,50,000 is the down payment. Let's write 1,50,000. What is the journal entry for receiving down payment? Bank account or to hire purchaser account. So by bank account to hire purchaser account. Next one. Now we have to calculate the interest. Interest is receivable. For him, interest is payable. For hire seller, interest is receivable. What is the journal entry for this? So interest. So hire purchaser account to interest account. By hire purchaser to interest accounts. When we are going to calculate the interest on the last date of the every year, we have to calculate the interest. That means 31/12/2009. We have to calculate the interest. So what is the rate of interest for the first year? The first year interest here it is 40,500. So it is 40,500. Now we have to make the first installment. So on what day have to make the first installment? On 31/12/2009 we have to make the first installment. What is the rate of installment? Let's look here. So first installment is 1,38,900. So 1,38,900. Remaining balance will be carried down for the next year. So let's tally both the side. Leave one line space and let's tally both the side. Which is higher amount? 40,500 will be the higher amount. This is the lower amount. So write the higher amount both the side. It is 6 lakh plus 40,500. So we'll get 6,40,000. 6,40,500. Here also 6,40,500. So what is our difference? Minus 1,50,000 down payment minus 1,38,900. So it is the installment. The remaining balance carried down is 3,51,600. 3,51,600 is the balance. So once the balance is carried down in credit side, you have to brought down in the debit side. Carried down in the debit side, we have to brought down to credit side. Next one. So when we are going to brought down the amount, so the first day of the next year. So what is the first day of the next year? This is last day of the previous year. This is the first day of the next year. 1/1/2010. Now two balance brought down same amount. So here it should be brought down to here 3,51,600. So now for the second year there is no asset selling entry and there is no down payment entries. Now we have to calculate the entries from interest is receivable. Next one is installment is received. Next one interest transfer to profit and loss account. Only 3 entries from the next year. Now the date is 31/12/2010. So we have to receive the second year installment. Before second year installment we have to calculate the interest. So 31/12/2010. So what is the journal entry? So higher purchaser account to interest account. By higher purchaser to interest account. So we have to write to interest account in the higher purchaser account. So what is the second year interest? Let's look at the second year interest here. 31,644. It is 31,644 here. Now again 31/12/2000. Here we have to pay the installment or we have to receive the installment. What is the journal entry to receive the installment? Journal entry is bank account at So bank debit the receiver, credit the giver. When the hire purchaser pay the amount to or pay the check to the bank, who is the receiver? Now bank is the receiver, hire purchaser is the payer. So debit the receiver, credit the giver. So that's why by bank account to hire purchaser account. Next one, by bank account. So what is the second year installment? So second year installment is 1,38,900. Now tally both the side. So it is higher amount is, so debit side is the higher amount. So installment plus 31,644. So we'll get 3,83,244. Here also 3,83,244. What is the remaining balance? Direct 1,38,900. So we'll get 44,344. Again, the balance should be brought down for the next year. So what is the first day of the next year? This is 1/1/2011 is the first day of the next year. The same amount should be brought down here, 2,44,344. So for the next year again, we have to write installment is received. What is journal entry? So buy bank account to hire purchaser account. So buy bank account to hire purchaser account. The date is 31st/12/2011. So same 1,38,900. This is the fourth year installment, and this is the third year. It is 21,990. So it is 21,990. So remaining balance should be carried down. So same 31st/12/2011. Here also 31st/12/2011. So 2,44,344 plus 21,990. So is 2,66,234. 2,66,234. Now it is the balance is, look at the balance, it is 1,27,434. It is 1,27,434. Here also the balance should be brought down on 1/1/2012. The 1,27,434. Again, the last date is 31st/12/2012. The same amount. Next, the interest we have to calculate. We have to show the interest. What is our interest? 11,466. So write the interest on 31st/12/2012. The interest rate is 11,466. So 11,466. The total is 1,38,900. So here also, so we have to pay 1,38,900 as the last installment. Here also 1,38,900. So this is your hire purchaser account. So usually for 15 marks they will ask for 3 years, but I have shown the problem for 4 years. So if you ask for 3 years, you can write up to here, the problem will end. Okay, let's go to the next account, interest account. So what is the interest account? Where interest will appear in the journal entry. What is the first interest account? So we have to show interest is receivable. So journal entry for interest is receivable is, what is the interest account? By hire purchaser account to interest account. So in hire purchaser account to interest account. In interest account by hire purchaser account. Again I am repeating, in hire purchaser account we have to write to interest account. In interest account we have to write by hire purchaser, ulta. So it is vice versa. So we should write, so by hire purchaser account. On what day we will calculate the interest? At the end of the each year we have to calculate the interest. So it is 31st/12/2009. 2009 hire purchaser account. What is the first year interest? Let's look at the first year interest is 40,500. It is 40,500. The same amount will be transferred to profit and loss account. That means interest account are to profit and loss account. So for higher salary it is a profit, for higher purchase it is a loss. Next one, the same date 31st/12/2009. So it is 40,500. Tally both the side, 40,500. Here also 40,500. Next year, what is the next year interest? 31,644. So let's write 31,644. Here also the last date is 31/12/2010. 31,644. Here also the last date 31st/12/2010. So it is 31,644. So tally both the side, 31,644. Here also 31,644. Again third year interest. Look at the third year interest. It is 21,990. So let's come to the interest account. The last date is 31st/12/2011. So interest is 21,990. So write 21,990 here. Again come to the last date. So it should be transferred to profit and loss account. Then it is 21,990. Again tally both the side, 21,990, 21,990. Let's come to the last year. So last year interest is 11,466. So last year also we have to transfer the amount. We should show the interest is receivable. Then the interest is received. We should be transferred to profit and loss account. So it is 11,466. So again, last year 31st 12 2012. So I should write first year 31st 12 2012. So it is 11,466. 11,466 tallied 11,466 here. Again come to the, should be transferred to profit and loss account, 11,466. Here it is 11,466. So this is your interest account. So on the base of journal only we are preparing ledger. So for every ledger the journal should be running in your mind. So all journal entry should be going in your mind. Then only you can do the ledger. It's very, very simple problem. No need to worry. So in the next session we are going to discuss about problems on ledger entries in the books of hire purchaser when the cash price is not given. If the cash price is not given, how to calculate? So in this type of problem we have to calculate this type of chart. In that type of problem, when the cash price is not given, they will give the third year, second year, first year. So it is interest is inclusive. So we have to exclude the interest and we should calculate the actual cash price. This is the type of the problem we will be having for the exam. So in the next session, we are going to discuss on this type of problem. Till then, thank you so much. So keep watching. We'll meet in the next session. If you have any doubts and queries, please leave comments below. Thank you. See you again.